Intro music. Welcome back to Wealthy Business. Today, all eyes are on Federal Reserve Chair Jerome Powell following his keynote speech at the Jackson Hole Conference. In a highly anticipated address, Powell laid the groundwork for possible interest rate cuts, though he remained cautious about timing and specifics. So what does this mean for the markets and your investments? Let's break it down. Transition to key points. Host voiceover. Powell delivered his much-awaited speech from the Fed's annual retreat in Jackson Hole, Wyoming. The key takeaway?
The time has come for policy to adjust, Powell stated, signaling that rate cuts could be on the way, but their timing and magnitude would depend on incoming economic data. With inflation finally showing signs of easing, Powell noted that the Fed can now shift its focus to maintaining a strong labor market while keeping inflation under control.
Powell emphasized that inflation has significantly declined, and the labor market is no longer overheated. However, he made it clear that while progress has been made, the journey isn't over yet. The Fed remains committed to balancing its dual mandates of price stability and full employment. Market Impact Segment, Host Voiceover. As Powell spoke, the markets responded positively. Stocks gained momentum while Treasury yields dropped sharply. Traders are now pricing in a 100% chance of at least a quarter-point rate cut at the Fed's September meeting, and there's even talk of a half-point reduction, according to the CME Group's Fed Watch tool.
The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
Powell's message appears to be cautiously optimistic. According to economist Paul McCulley, Powell's speech could be seen as a valedictory, signaling that the mission to curb inflation has largely succeeded. But what does this mean for investors? Transition to market expectations. The speech comes as inflation continues to drift toward the Fed's 2% target. Currently, inflation stands at 2.5%, down significantly from its peak above 7% last year. At the same time, unemployment has inched up to 4.3%. But Powell attributed this to a higher workforce participation rate rather than layoffs, signaling that the labor market remains strong. Experts like Joseph Livornia, chief economist at SMBC Nikko Securities, believe that Powell has positioned himself to take action at the Fed's next meeting in September. The door is wide open for a rate cut, potentially as large as 50 basis points. So, what's next? The Fed is expected to begin easing monetary policy soon, but Powell remained non-committal about the exact timing. Still, markets are optimistic that rate cuts could offer relief, particularly for sectors like tech, which have been feeling the pressure from rising rates. Powell also reflected on the challenges that led to the inflation surge. He acknowledged that both the Fed and many economists had initially dismissed inflation as transitory, largely due to COVID-related supply chain disruptions.
The good ship transitory was a crowded one. I think I see some former shipmates out there today.
But when inflation spread beyond goods to services, the Fed quickly pivoted, raising rates by a total of 5.25 percentage points in just over a year. Powell's candid reflection shows that the Fed isn't afraid to admit its mistakes and adapt. He credited the Fed's firm actions for helping to stabilize inflation expectations and avoid a recession. As we move forward, the big question remains: when will the Fed begin cutting rates? The answer depends on economic data in the coming weeks. Powell's speech may not have provided all the answers, but it did offer a clear message. The Fed is prepared to act. Be sure to subscribe to Wealthy Business for more updates as we track these developments. Let us know in the comments. What do you think Powell's next move will be? Are you expecting a rate cut soon? Thanks for watching, and as always, stay informed and stay successful.